Good morning, everyone. Good morning. This is Marziti here with the Bullish Bears, and we're going to do our pre-market string. And let's just see what we can knock out today as far as looking at the markets. Oh, let's have a look. Kevin here is out today, expecting back tomorrow. But, I look at things a little bit differently than Kevin does. And that's not saying that one person's right or wrong. It just means we have different trading strategies and different setups. And remember, folks, that all setups work sometimes, but not every setup works all the time. And we also have to kind of remember that it's not so much your trading strategy. It's looking at the context of trying to figure out when your strategy applies um, in the current market setup. So so there's a strategy, but there's also the overall market content, and that's the kind of thing that you have to look for. So I don't generally trade while I'm streaming because I'm terrible at doing both, but I will call things out. How my stream is a little bit different than Signet's is going to be Signet does a fantastic market summary overview in the mornings. I really, especially if you like swing trading, long term trading, stuff like that. Signet covers a lot of stuff that you might like there as far as the general market health. And of course, he does talk about the S&P itself as far as intraday kind of trades. But that's the focus of his. Now, the difference here in my stream is going to be I'm going to be looking at what do I want to trade today. And so as you can see, I've got quite a few charts up here. And we're going to kind of go through them to see is there a trade set up. Now I'm starting here on the 4 hour, and we're kind of going to go through some of this kind of stuff here this morning. First of all right, so let's kind of get into it here. We're going to start here in the top left with crude. All right, so we're on the 4 hour chart. The vertical lines here represent the day breaks. My chart setup is as follows. This is a 60 period linear regression with the one standard deviation bands. So red, that's one deviation, approximately 60. So we know in statistics that 68% of the time, most people just simply say 70, that 70% of your trades are going to be between these two red bands. Then the green line, 95%, that's two deviations, 99%, three deviations. We also know the slope is bearish. So the way I trade is I'm looking for a pullback in the opposite direction, and then I'm looking for the trade to bounce the other way. So in other words, when we were bullish here, I'd be looking for a pullback to like this one deviation here to go bullish in my direction kind of thing. That's my strategy. Again, not saying it's any better or worse than Kevin's or Jeremy's or anybody's. It's just how I like to trade. Again, you have to take context. So with that explanation done, let's move on to the charts. So here's Iraq. Iran. Here's the Iran-Israel conflict right here. There's where it started. Oil skyrocketed, and then we have started coming back down. Now that we're in the ceasefire, the demand for the uncertainty about oil has kind of gone away for a while, so it's come back to a natural level. You notice how tight it is? The average daily range, tighter. Applied volatility, lower. Pivot points, tighter. This kind of tells us an interesting thing, that if we break out, it's going to run. There's a very good chance we're going to run. Notice here that we are inside of yesterday. All right, here's yesterday's low. Here's yesterday's high. We're still inside of it. No pre-market breakouts yet. Let's slide over to the ES. Again, 60 period. So this is looking at the last 60 candles of the 4-hour chart. Now, we're going to zoom in on some of this kind of stuff, absolutely. But we're just kind of getting an idea here. We trended yesterday, and today we are kind of flat. Looks like we're moving with a slow grind north, but we'll just have to see. We'll talk about market moving events here in just a moment with the calendar. Gold. All right. Here's gold's low from yesterday. Here's gold's high. Obviously, we're still inside. All right, what do we got over here? Copper, natural gas. I know you guys don't trade that, so I'm not going to cover that. NQ. So the NQ has broken out, looks like, from yesterday's high. So that's interesting that the ES has not done that yet. We'll zoom in on that in a minute. The Russell, kind of flat. Silver, I like silver. It's expensive, though. It's $25 a point, which obviously is not a point, a tick. $25 a tick. So it's more like the NQ, but any rate, again, ADRs are tighter, but the pivot points are greater. Now, that's a weird one. The pivot points, of course, are based on yesterday. ADR is based on the 21-day moving average of the highs and lows. IV is lower, so when we look at the general picture, this tells us that silver is very likely, though, looking at very possibly if it does break out, take out a high or low, is probably not going to go anywhere because yesterday was greater. So therefore, in order to be greater, today it's got to have a bigger percentage move today than it did yesterday. So, and the IV's lower on it. VIX, flat. All right. Let's move in now to some tighter ranges here. So let's get into the 15s and see what we can see. Now, remember, everything here, like the ADR is the same, the IV's the same, the pivot points are the same, but the bands are going to change, obviously, because they're based on the last 60 candles. So my first idea here is to kind of identify. I tell you what, let's do that, but let's do the market moving events first, and then we'll go into the charts for the second round. Let's point out here that there is no 8:30. Trump is speaking at 9 o'clock. All right, we know it's not. We know that Trump can say things. I'd be more concerned about Trump tweets. Just because Trump is speaking in a press conference, I don't expect any volatility to come out of that. But I could very well see, this is the problem with things like Edgeful, is that Edgeful is basing its statistics on historical information. The problem is that Trump tweets are going to always override averages because they just come out of nowhere. So if you're using Edgeful, you got to remember that a Trump tweet can totally explode any trade that you're in. Just remember that. It'll settle down, of course, but right now, we're still dealing with a lot of volatility from Trump tweeting. And this is not a political commentary. That's just his style. It makes things a little bit more rougher for us as traders because we can get blindsided by a Trump tweet coming out. And there's also the fact that Israel and Iran have this supposed ceasefire going on. I'll put $1 to tell you that one side will violate it. I can put $1 out. One side is going to violate this peace talk, or this truce. When? Don't know, but I can guarantee you the markets will explode when it happens, because that's just the way the markets move. But of the things that we do know, we do have 10 o'clock home sales, and we have Powell talking at 10 o'clock. Now, we don't expect Powell to say anything. Powell's not going to make, 90% of the time, Powell is not going to say things that just rock the markets for the fun of it. No, I mean, he doesn't. He's had a moment or two, but he doesn't normally do that unless he slips up. The problem with Powell speaking or Trump speaking or any of these big things is that the AIs are listening to everything that they say, translating it to text, reading it, and trying to make sense out of what it's saying. And if they interpret anything that Trump or Powell says as a red flag to them, then they will all of a sudden trigger trades. So we want to be on guard with our stops and things like that when Trump is speaking, when Powell is speaking. I was looking at some other streams this morning where they were talking about the fact that we're still thinking about three rate cuts this year, which will be very bullish for the markets as far as the S&P kind of stuff goes. Maybe not so much gold, but definitely for the S&P. And so, people will ask him about it and that kind of stuff. So this is this is where he's testifying in front of either the Congress or the Senate kind of thing, and then they'll ask him some questions. So generally there'll be a 30-minute statement from 10 to 10:30, and then there will be some Q&A from like 10:30 to 11:30. So from 10 to 10:30, I don't really expect there to be an issue. It's that after 10:30 area where we need to be a little bit on guard when they start asking him questions or something like that. Who knows? If we're trading crude, here's 10:30 to be aware of. All right? Now, back to our immediate charts. Charts. There we go. Oop, what did I do? Hit the wrong thing. Okay, there we go. If you've got a very, very quick question, or if you're having a problem with my screens or something like that, I've got an open mic here. I'm allowing you guys to come in on the open mic. Feel free to ask questions or type them in the chat. Let's see, where are we? Let's go in here. We're on the 15-minute now. So, what are we seeing? Well, so we're going back to midnight-ish. We see, and this yellow line, by the way, is the intraday volume profile, volume point of control. Talk about that here in a moment. So again, I'm still hunting for something to trade. So I'm following my white line here to see we're in a downward slope. Overall, we were bullish. Now, somewhere around 4 a.m. during the London session, we changed our minds, and we're in a bearish slope. Now, if I were going to trade this, I would be looking, the problem, I would say I'd be looking for us to hit somewhere up here around 65.16, and then maybe the 65.27, and look for a rollover back down to the linear regression line. However, we've got this volume profile line sitting right there in the way. What does volume profile mean? Volume profile means that is the price here at, I'm so zoomed in, my mouse is uber touchy right now, somewhere around 65.2. That is the price that more contracts have been traded here at 65.2 than any other price since the market opened at 6 p.m. last night. That is the most favored price. Now, what does that tell us? Well, that tells us that any time that price gets to that volume profile line, it's going to hang there very possibly and chop. Now, it makes for a great target. So if you're long right now, we get up to either this deviation, this linear regression line, 6506, or if we get up to that volume profile line at 65.2, that's where I would really look. I'd be rushing my stops up behind me, expecting chop or a reversal. We get up to that volume profile line, though, I would expect probably some chop for a little bit. Now, remember, this line is also very dynamic throughout the day. So right now, in the short term, it is bullish, but there's not a lot of range here. We're going from 64.98, 65.05. Okay, so there is a bullish trade in there. However, like I say, we've got to be mindful of this right here. All right, let's go over to the ES. Now, see these two big candles here on the ES starting at 7:30 this morning. Notice the size of them compared to the overnight. We had a good candle right here, but now we've got to step up. So we've got two pretty aggressive candles. Then we had spinning top doji, some indecision with some pointing up and pointing down. So what do we see here? Well, first of all, we did hit the outer bands. It was easy to hit the outer bands because you'll notice here how wide they were, and then they tightened up. So when they tighten up like this here, expansion comes easy. So I'm not as surprised to see them hit these outer bands, but what I will be looking for is a rollback to about the midpoint of these two candles, puts us right about here. If we give it enough time, this linear regression will catch up to that. So, it's very conceivable. 6150-ish, I think we can easily come back to that in pre-market and maybe early market. We do notice there's a DeMark sequence here. This is the secondary DeMark sequence. It goes to 13. I don't usually use it. It is up here. DeMark sequences indicate exhaustion. And so on Thinkorswim, if they're yellow, that's the short term, indicating a short-term exhaustion. And as you can kind of see, it did play out. There was that saying this bullish run exhausted, and it did play out. The red ones, however, are the longer-term exhaustions, and they don't trigger true as often. So I do kind of watch it, but I don't have as much faith in it here. The trend is still bullish. I do think we're probably going to roll back down here to the 6151-ish at some point, simply because of, we've got this little fair value gap between the high, this wick here, to the low here. We did pull back in, but really not a 50% back into it yet. So these are people just sitting. They're waiting. And it may be like this until 10 o'clock. We don't know. We don't know. Let's take a look at gold. NASDAQ, I'll get to the NASDAQ here in just a second. So gold is rolling down. It used to be that gold and the ES especially were linked inversely at the hip. I talked about this yesterday, but yesterday was such a disastrous stream on my part because I had so many interruptions externally over here. And I apologize for that, and I felt so bad about that. But, now it's in the history. Let's take a look at what we've got here with gold. What I'm going to draw your attention to is we've got a high, and we have this low. Now we've got a rush right here. So what I see here is a box. So I'm going to have to zoom out to draw this. So let's go here. Oops, that is not what I wanted. What did I want? I wanted this. Is this what I want? Yeah. Okay. You know what? Let me do this. Instead of trying to work in that tiny window, let me just maximize this. Come on. There we go. Gold. There, that's easier to see. I've got this little pre-market high that started here. Then we've got this low. And actually, I'm not on the correct low. Let's fix that. There. Okay. We closed outside of the box. We broke that. Now, what are we looking for? We are looking for the 111 and the 123 are our very, very important. We have to stay. See, we're going back inside the box. But this region between the breakout of the box and the 123.6, if price turns back around in this region and goes back inside the box, closes back inside the box, then this is what we just call Signet calls it a draw and raid. It's simply a liquidity run to grab the contracts from these lows to go back the other way. So right now this is on the 15-minute. Let's kind of zoom in here on, let's start with the 5. There we go. I'm looking to see what's going to happen here. Notice here on the 5, here's the linear regression line. Here we hit the fourth deviation. We moved back inside the box. You could take this short right now with your stop right here at 3336, targeting target 1, the 3331, but ideally 3326. Well, call it 3327 because it is rounded. So there is a potential trade right there to go short if you want to, but it's important, it's crucial to understand we are in a danger zone right here because this is where we're trying to say, is this a liquidity run or is this a measured move? We don't know. If we close back inside the box, then it was a liquidity run and it's going back inside the box. If we take out this candle right here and continue marching and we can close on the other side of the 1236, then it's making its way towards the measured move. First target will be the 150 mark, a half measured move. A full measured move would be here at the 3319-ish. Let's see, what do we have here? Well, the ADRs have been tighter for the last couple days. IV the same of yesterday, so nothing there. The pivot points being greater today than yesterday tells us it's harder to make a big move. It's harder today to make a big move. And although pivot points are really old school stuff, people still trade them. People still trade them. In fact, let's put them on and take a look at see what that looks like. Pivot points. Daily. All right. Here's pivot point S1 way down here at 3302, but I can easily see us making about a half move of that, putting us somewhere between this 61.8 and 200. I think it's very plausible that if gold is looking bearish today. Now remember, gold, I started to talk about this a moment ago and then I got sidetracked. It used to be that gold and the ES very joined, but inversely at the hip. But then came Bitcoin. Because the idea is that gold was used as the hedge. If S&P took a dive, then gold would go up. Okay? And so you would hedge yourself in gold. Well, then when Bitcoin came out, all of a sudden this relationship between gold and the ES broke, and gold started moving independently. Well, now, because of the so much volatility in Bitcoin, and because Bitcoin has been having these big pullbacks and different things like that, people are starting to roll back into gold again. So we're starting to see that inverse relationship between the ES and the gold is reforming. So if ES is going to climb today, it's very possible that gold is going to decline today. And so I think it's very plausible about this level here, this 33.27-ish, 28-ish, is very much plausible. But you'll notice that we are going back inside this box. So if we see there was a fair value gap from here to here, we've gone back into that gap. However, there's also a fair value gap from here to here. Here's our linear regression. We've hit this here. I think if we actually went, if I were trading this, still should be in about the break-even point. Watch the tug of war. Watch this. See, it pulled back, it went down. If you're in a short right here, you're possibly in profit. Bring your stops now to break even, because since we did pull back and rolled back over, there's no reason we should go back north again unless we're doing liquidity raids. Here we go. There we go. Watch the reaction right here again. If you're watching your DOM or your time in sales, you'll see some reaction right here. And you'll see some reaction right here at 3331.2-ish. So you should be in a good position if you're on that short right now. Type of thing. So, at any rate, however, we are not through the 123.6 yet, so this still is a potential reversal. There we go. The DeMark sequence is kicking in, but it's a 7 out of 9, so that is showing that we're nearing exhaustion. So, do I think we can get down to the 3327? The 150% mark? Very plausible. Now, if that is the case, then what is ES doing? Okay, ES started that march up earlier. ES has hit, obviously is going the other way. So we had a low, we had a high, we had to move back inside the box. So if we did the comparable trade over here, if we're looking at a long, we're just now getting outside of the box. However, that's on the 15. Let's bring this down to the 5. This is the first box that qualifies. What do I mean by that? I'm saying that this box did not close outside of the box. This bar did not close outside of the box. It wicked, but it didn't close. It ran up, it grabbed some liquidity. You could take the trade long here if you wanted to. So if we think gold is going to be bearish and we think the ES is going to be bullish counterly, I still would like to see a close outside of the box here because all we see right now is a liquidity raid. Let's go down to the 1 minute. Come on. There we are. Now on the 1 minute, we've got a close on the box, outside of the box. We did break that high of the box, of the bar that closed outside, but it's sitting right here. So you could take, let's see, wait a minute. Here we go, pulling back inside the box. See, this is like I say, if you don't get past that 23.6, then this is very possibly a fast or slow moving liquidity rate or whatever to turn around and go south. And that's why it's so important to pay attention to the overall content here, context. See how we hit this deviation band and we came right back to the middle. Now, just out of curiosity, what did gold do? Yep, see, gold is reversing. See that relationship? So gold is bullish. If you went short back there, or short back there, and you were moving your stops, you should have at least either taken profit or gotten out at break even on that. All right, so what did we do? Well, we hit the gray line here, 50% retrace, or excuse me, where's my box? Yeah. So we're looking for a very strong potential. Understand that if you're doing standard deviation trading, notice this is bullish. We hit this, we come back to the mean. Do I expect, however, if I hit the gray line here, do I expect us to come to the gray line here? Not necessarily if we stay bullish. Notice, though, that we're starting to roll over here. So we did hit it. But if this was going to be a trend, an up, a pullback, a higher up, a higher high, a pullback, a higher high, then your pullbacks are not going to be necessarily to the same deviation on the backside because you should be seeing higher highs. Excuse me, higher highs and higher lows. That's what I'm trying to say. So just because I hit this gray line here does not mean I'm going to hit that gray line back here. It might be gray to red or gray to green, gray to, standard linear regression. Now, if we're moving sideways, I do expect a full ping pong game of gray to gray, gray to gray, or green to green, green to green. All right, 908. All right, so, interesting. We've got a DeMark sequence on the 1 minute showing us bearish setup. Now, if you trade DeMark, you would take you got 2 entry points here. One, when you get this one candle, you take the break south of the low of this. If you want to be a little more conservative, you take the break of the number 2 candle. The problem with the break of the number 2 candle is that your stop is supposed to be way back here at the number 1 candle. So, if you wait for this confirmation, your stop is way further back than if you got in on the break of the number 1 candle. The challenge here is, again, look at this in context. And what did we actually see here is we saw that we looked outside of this box, rolled back in, came to the 50%. So do I trust this DeMark sequence right now? It may still play out, but hitting that 50% inside of the box is very, very significant. Because this is now the decision line. It made for a great target short, And this would be a great target, but it's also the decision line because now it decides which way do we want to go. So we don't know. We can see here, if you look at this line, that it came down and matched, I believe. Yeah, so if I look at the low of this candle here, let me look up top. Way up here on Thinkorswim, the marks are up here. So if I look up there, I see the low was 61.5375 and 61.5375. Most people talk about that these liquidity runs are that you have to break that low. No, you don't. You can match it. It could be one or two ticks short of equaling it, and the liquidity rate can happen because it depends on where these people over here that went long, they could move their stops up just a wee bit to cover cost of commissions and things like that. Okay. So here we are. We essentially came down for some liquidity here. So when we make these liquidity runs, the question is, was there enough liquidity to flip this for a complete reversion, or was there just enough for a quick scalp? And we don't know. We just have to take the trade and see. You notice here that the DeMark sequence broke, and that's one of the problems about the DeMark sequence is that it can come, it can go, it can come, it can go, because it's based on looking at where the candle is based on the prior four candles. And so if you look here, see this candle was looking back. You remember we had a number one candle here a minute ago. Well, if you look back 1, 2, 3, 4, well, this candle's low was clearly lower than those candles. So it gave us a bearish one. And then for a time, this low was lower than 1, 2, 3, 4. Okay, that's good. But eventually, as we move through this, all of a sudden now, this candle's low here, 1, 2, 3, 4, it wasn't. When it turned green over here, it wasn't lower, and so the DeMark sequence broke. It stopped, it invalidated, and it flipped now to looking at highs instead. So that's one of the problems about DeMark sequence. I like to look at DeMark on the longer term thing because it's more consistent there. Anybody got any questions so far? We're going to take a little break here in just a minute. We're looking at some scalps here, obviously, but let's go back and just kind of wrap this up, and let me reset my intraday survey and just kind of say, is there a trade? Where are we going to trade today? Crude has inventories today at 10:30. It's as flat as a pancake right now. Let's move to the 15-minute. It's also right now back at linear regression and volume profile. Don't touch it right now. Absolutely don't touch it right now. Clear that off of there. Clear that off of here. As you can tell, I've been kind of doing a lot of some teaching along this session as well. ES, I'm expecting a pullback a little bit to the bottom of this 745 candle. I think we'll take that out today. We're just looking for that pullback there. Crude right now, absolutely no reason to touch it. It's for multiple reasons. It's right in a decision point. Gold looks a little bearish, but if we go back, all right, I know you can't see this. That's fine. I'm going to draw this line in. I'm going to plot that line. Dadgummit, come on, get down there. There. Your liquidity line. All right, fine. Let me blow this up. I can't even see that. What we did, that's in the wrong place. Which one? Here. There's your liquidity right there. So a full reversal brings us back down to 3308. Now, what are our targets intermediary? We have duplicate one here. And maybe I see another one. Duplicate. Right there. So now we've got some short-term targets. Notice, see this little band of chop right here? That means anytime we see these little bands of chop, we know that price stalled in that area. It was a momentary volume node. Momentary volume node, a price that people liked that price for that little small moment in time. We notice that the intraday node volume profile, VPOC, is right here. But we notice that yesterday's volume point was right here. So it's very important to understand that 1 or 2 days worth of volume profiles. Let's just let me mark that out on gold. I'm going to draw a line here. Come here. That was yesterday's. And just because it's to make it different, like so. The last couple days, volume profile levels are always very important targets because it's a price that everybody really liked. So this was Tuesdays. This was Mondays up here. We are on Wednesdays. So do I think we'll come back up here today? No, really not. Not unless we have something, if we have some incredible bad news out of the Middle East, yes, we could skyrocket back up there. But that's way outside of things. So I'm really more interested in yesterday's volume point of control. I made it in the little dotted lines. Let's now, well, that didn't work at all. Let's try. Why are you doing this to me? So here's yesterday's volume point of control. It was locked in right here at the end of the day. Notice we've gone up and we've come right back down to it. Be aware of these kind of things. You will come back down to them or up to them throughout the day sometimes because everybody liked this price yesterday. So why not today? Unless it's going to start trending in a direction like it did yesterday, where we had a price up here and then it just started marching its way down here because that was a trend day. Right now, we're not looking at a trend day. So we are going to be hovering around things that we say, there's no particular push to go this way or that way. So we're going to hover around prices that we liked from previous days. You know what? I'm just going to wait for the 9:30 break. I just don't see. I see a lot of. There's scalps in here. Yeah, there's scalps in here. Beyond that, though, I'm just not seeing any tremendous setups. I see some trending and stuff like that, but we're going to wait till 9:30 on this and watch the morning reactions as far as what happens. So with that, I'm going to take about a 10-minute break, and then we will come back in and look at this again. Has anybody got any questions real quick before I start our little break? Okay. I'm going to leave the stream running, and but I will step away for a bit, and we'll, like I say, be back around 9:30ish for market open. Right. Okay, looks like we're about ready. We're within 2 minute window, according to my Thinkorswim. 1 minute exactly until the market's open. Okay, so index trade. Let me, while we're taking a quick moment here, I'll zoom in here on the ES and explain this. For those of you just tuning in, the way my charts are, this is a 60-period linear regression line. Think of it sort of like an average, like a 60-period moving average. The red is one deviation away from that. We know that price generally is going to stay between these red lines about 70% of the time. 2 deviations on green, price should stay about 95% of the time between the 2 green lines. Linear regression trading is a reversion to mean. Okay, yeah, I'll get to that in just a second here. Index trade. And then blue is a 99 and all that. Okay. The average daily range is traditionally a 7-day, 21 day, let's get that right. The average daily range is typically a 21 day, similar to the ATR. What we're going to do though in the ADR, the average daily range, is we average for within each day, we take the daily high, the highest high of the day, minus the low of the day, lowest low of the day. That's a range. The highest high of the day minus the lowest low of the day. And we get that number. And then we do that for the past 21 days and average it. And so that tells me that the range from the highest high to the lowest low on the ES right now is averaging about 79, is about 79 points. All right. So if we look at the market open, we would expect from market open, we would expect the average to be somewhere 79 points of market open right here, plus or minus 79 points. I mean, that range, it could go up 30 and down 49 from open or whatever, but we expect the highest high minus the lowest low average right now to be around 79 points. Implied volatility just tells us how knee-jerk reaction are we expecting the markets to be? And right now they're saying about 16%. That is actually based on the options. If we go look at the options, they're saying that today's expected volatility or chaos is the same as yesterday. So we're not expecting, the markets from the options side are not expecting any wild, crazy moves today. And then PP is the pivot points. I don't have that on here right now. We'll look at that here in just a minute, though. But when we see that the pivot points are smaller today, it means that if we get, now that's relative to yesterday. Pivot points are always relative to yesterday, not to, where the ADR, average daily range, is 21-day average. Pivot points is simply looking at today's pivot points versus yesterday's. Because the pivot points are tighter on the ES, if it breaks out, we can expect it to run. So we'll see. Waiting so I can take a short before I go long. And okay, so Pedro's looking overall bullish on the day. That's cool. Remember, I said I'm expecting us to come back to this 61.51 or 61.52 area. Markets have opened. The first thing we did was take out all of this liquidity. Let's just take a look at that from pre-market. Here's pre-market. We've come back down to VPOC. There we are. Let's watch this right here. Let's see if we get it. Okay. All right. So we are still dancing in here. I think we'll get it today. I just don't know when. But you'll notice, like I said, we did have this liquidity raid right here that's come back down. All right. I'm going to switch over to TradingView. Well, actually, let's go back to our panel real quick. Anything jumping out yet with market open? We made a run here. We did the same thing on the NASDAQ. I know you guys can't see these screens that well. VIX is really heavily marching south here in the pre-market. So that kind of gives us, we see the comparable bullish. Gold is moving south, but kind of flat. All right, we may be running a bullish thing here. So I'm going to go to the ES to start with. And because I'm not an NQ trader. So we're going to switch over to this now. Now, the first thing I want to notice here, since 9:30, really, is it 9:35 already? Okay. And let's just zoom in here. Now, if you like the 9:30, if you like the 5-minute orb is not very reliable. The 5-minute orb is not very reliable. But the 15 is a little bit more. I will be looking at the orb at the 15. Let's just take a look at my TradingView chart here. Same kind of setup with the standard deviation lines. This is the visible range volume profile, VRVP. This volume, understand that on TradingView, this is only of the candles on the chart. So notice that if I shrink my chart. Come on. All right. Well, that didn't work, but there it goes. See, there it goes. Just needed a minute to catch up. So it's only of the candles that are displayed on the chart. So if I zoom this in, so let's just take this to a 15-minute chart. Let's mark up the ES and just kind of see. And what I want to do is I want to get us about so. There's market open back here on the left at 6 p.m. last night. So now I have got this purple line is VWAP. So that's interesting. So I'm going to put me a yellow line there. Notice this node right here. Roughly. Okay. So that's our pre-market volume nodes. We have a very strong, high probability of coming back into these kind of things because it's a price that people really, really liked. Okay. Okay. So we busted out here for a little bit, came back into these fair value gaps. Notice these higher highs. We are going long, it looks like so far. So what I want to do, there's a couple ways you can do this. There's always multiple ways to do this, depending on what your strategy. The first thing we can do is we can just simply say, well, what are the pre-market highs and lows as far as our measured move? So let's start from here to, remember that when you mark, you do not mark the 930, you mark the 915 because the 930 is 930 to 945. So if that makes sense, I hope you guys get that there. Remember the candle you're looking at here. So here's pre-market highs and lows. Our first, well, where are my numbers? Oh, they're on the left. If we're going to break pre-market high, the first thing I see here is, and I'm going to zoom in on this so you guys can see this, pivot point resistance 2. While it's a good target, if we close above pivot point R2, we can expect then, or if we get up to that, we either bounce between R2 and, where's R1? I don't see R1. Where's R1? There it is. We have a tendency to bounce between 1s and 2s, whether it's R1, R2, or way down here at the bottom, S1, S2. We also have a good probability chance, though, do we have a good chance of coming all the way back down here to the central pivot point? I don't think so. Since now, if we have a major breakout over this R2, you can expect us to probably get to the midpoint. Very, very seldom do we get to R3. Very seldom do we get to R3. But you can kind of divide this into a quadrant of 25, 50, 75, 100, and you could probably see a 25% move above that, maybe a 50. We're expecting a quiet day unless Powell or Trump says something. Remember, they start talking at 10 o'clock. So in 20 minutes, both Powell and Trump start talking. And the AIs are going to do their thing here. Now, this here is simply the pre-market levels. So let's take a look at what happens with the pre-market. Remember, our zero line is right here. So we are above. So let's tighten this now down to the 5-minute. We did close above pre-market high. So where would I be looking for in a trade here? Now this is my trading strategy. You've got yours. Given some of this slow movement today, I would only be looking for scalps until something else happens. And the markets may wait till 10 o'clock to see just if between Trump and Powell speaking. Powell is just doing a statement before the Senate or Congress, so I really don't expect anything to come out of that. There is some thought that he's going to confirm there's some thinking that he's going to confirm I just realized I'm local recording. I'm not streaming. Dadgummit. Over on YouTube. That's fine. If anybody needs this, I can upload it. Swanee, I hit the wrong button. But at any rate, back to Powell. There's some thought that he's going to confirm that there's going to be 3 rate cuts today, as opposed to, if he does kind of confirm that they're still leaning towards 3 rate cuts this year, that will probably still be a good bullish sign for the markets. Now, Trump in an interview typically is not going to say anything incredibly, whatever. Here we are. We're approaching that pivot point. But remember that in both cases with Powell and Trump, the AIs are going to listen to everything that they say, try to interpret it, and if they do pick up on something, even if they misunderstand it, they may trigger some stuff. So let's actually go more into some scalping here. I'm going to take this off for a moment. Actually, I'm going to hide it. And I'm going to put us a new one on here because I see it. Remember, I've said this 1,000 times. I'll say it 1,000 more. What do you see in a chart? And I see a box right there. We had a low. We had a high, a move back inside the box. You would have actually taken it long right about here, but you see, here's the 50% move. We came really close to it. The 100% move is up here. So 50%, very important level. Anytime you do these measured moves, 50% is huge. 50% is huge. I can't believe I hit the wrong stupid button on the OBS. Swanee. All right. We are now at 9:45. Now, if you like to do the orb trade strategy, it's actually going to be from this low at 9:30 to this high. It's a box strategy. All right, here we go. Are we going back up to break that 50%? Now, to be honest, we've hit the 50%. We did not so far yet close above this 236. So we are still in danger of rolling back over. But if we do, up here, I'm seeing this, 61-ish, let's just say, as a very valid long target, followed by very possibly 61-63. But this kind of looks like a grind. So let's talk about what's going on the markets as a whole, though. With the ceasefire in place, the markets are relaxing. It's bullish It's bullish news to the market that we have the ceasefire. But it also means people relax. And so because people are relaxing, we're not expecting some of these outlandishly wild and crazy things like we've seen in the past couple of days. Also, because we've had some wild and crazy days, consolidation oftentimes, or sluggish movement follows. All right, what have we got here? We have got a spinning top right here. Notice the spinning top, long wicks on both sides, smaller, less than a third of the candle is in the body. That tells us it's indecision. It's akin to a doji, but so it's indecision. So here we are. We're making out here. This could be either a liquidity run or it could be a complete change in direction. Now, if we're going to come back down, we got this volume level right here. VWAP is down here. Looks like we may be going for the, I don't know. The problem with a volume node like this is if we get in there, we do this right here. We just chop around on it, and you don't know bearish or bullish at that point. So unless you have, so it's a good target. If you're shorting this market, that's not a bad short. But if you're wanting to pick a trade in here, you've got to be more careful because it's going to chop, and you need a different story. Remember, a trade is a story. You believe this is going to happen because. Let me go over here to the left for just a moment. And I want to point out, now Jeremy would call this a control candle. A control candle because it's a big range and it of and by itself is a measured move. So he would mark now Jeremy marks the body, not the wicks. He would mark the body down here at the bottom to the body of the top and snap this Fibonacci move to it. And if we were to do that, he would be looking for a half move, a 50% move up, which is pretty close. But at the same time, he would say that anything inside of this box of that candle is chop. So he would want, because Jeremy will say trade the break. So he would not be looking necessarily for a lot of trades inside this box unless he sees something on a smaller time frame for a scalp. This is, of course, on a 30-minute candle. So, I'm trying to do a lot of teaching at the same time while we're doing this kind of thing here. So what are we seeing? All right, so this is definitely looking better. But again, notice where we are. We are on the volume point of control. Let me tighten this up so that we get a little bit. Remember, this is based on the candles on the visible chart. That's why it's called the visible range volume profile. VWAP looking really good right now. Oops. Set that back. Control V. VWAP looking really good right now. 61.52. Looks like we're now going to start forming a fair value gap right here. Down here at the bottom is RSI. I don't look at it so much there as aside from, so understand, ooh, look at there. All these gray boxes are fair value gaps. So, wow, blasted right through VWAP. That's impressive. All right, where are our south side targets? Right here. I mean, we've got some fair value gaps, of course. We've got a double. Notice this is lighter here, so we've got a 5 and a 1 minute and a 5 minute fair value gap doubling up here. So that's the reason it's a slightly different shade. So very possible down here. Here is your second deviation band. Very possible here. We've got a prior day volume profile here. Notice these lows right down here. Now, the other things that we've got, like I said, we've got these lows down here. And so, all right, let's move on. When you get such a big move like this, though, it's very common to see what? A 50% pullback. So when this thing's exhausted, very common to see a 50% pullback, which would put us right about here around 61.53-ish. Well, no, actually it put us back at the volume profile. Visible range volume profile. Pedro short, stop loss today's high. Ooh, wow. Not bad. He's about 10 points. He's got about a 10-point stop loss. You could do that pretty easily in the micros. I wouldn't do it on the mini. That would be $500. I mean, you could. Depends on what your trading strategy and risk tolerances are. All right, there we go. We talked about that 50% pullback, so let's see. Notice where it went. The 1.5 of the pre-market high and low. No, excuse me, of my box. Sorry. Went to the 1.5. Went to the 1.5 of this box trade. There's a perfect example of a box trade that played out to the, well, not to the tick. It went one tick over, I'd say. Perfect example, though, of this box. Let me review that real quick for you. We had a low right here, significant low. It took out these others. Then we had a high that took out a bunch of highs. Then we had a move back into the middle, and that defines a consolidation box. It did break out. It went to almost a tick short of 50% above, rolled back into the box, 50% below. Now it's probably coming, I'm going to venture to say, right back to the volume profile. Or very close to. Remember, volume profiles are a range. Now this fib here is to the tick kind of stuff because it calls out actual numbers. But volume profiles like this are a range. It is that range around in that area where more prices were traded than anywhere else for the period that we're sampling. So the fact that this tug of war, watch this tug of war on this candle, keeps coming back close to this line. It doesn't have to be on the line. It's near the line. And also notice here, while this chart looks, big, actually look at the numbers. We see here, all right, we got 5 minutes, 5-minute warning till Powell and Trump both start talking. 5-minute warning, tighten your stops. Let me put that over in the chat here. Okay. All right, so what does this tell us now? All right, this tells me this original pivot point has played out. But what I was starting to say was, look at the numbers. This volume range profile, 61.55. The top of this candle, 61.60-ish. It's only 5 points. So while it looks big on the chart, it ain't nothing. We're in a scalper's market for right now. There ain't nothing here as far as big moves. Now, what can I do with my box idea? Well, what I'm going to do now, two things to understand. We broke outside of the box to the north. Then we broke outside of the box to the south. That now, while it does create us a new box here, it also indicates, though, we've expanded the range. And I'm not going to do that. I want to show you this instead. Remember, what do you see? Oops, that's not what I wanted. Let's go this way. See that? 1, 2, 3 touches on that trend line. Trend line, I can promise you that the algos know that those trend lines are there. And if I reverse this line, so that's called a broadening formation. It's also called a megaphone. And I guarantee you that if you are watching time and sales, that when it hits those trend lines, time and sales will explode. Because the algos know that it's there. We know that that's there because it's already touched it 1, 2, 3 times. 2 points make a line, yes, but it's a weak trend line. 3 points, every additional touch strengthens the significance of that line. Now, there's a couple other things that we can do with this. Extend the line to the left. I drew this from here to here, but look left, here, and here. Both of these lines have been touched multiple times. Now, let's introduce Jeremy's fans. Here in the center. And I gotta turn my head just a little bit crooked here, but what I'm trying to do is put that line about in the middle of this megaphone, this broadening formation. I think it's a kind of about like that. That now becomes a numeric. Let's see. Wait. There. That now becomes a deviation of the broad line, of the broadening formation of the megaphone. And you'll notice that price will have issues there too. That makes a new target as well. All right. Any questions about what I just did? So as we continue north, now notice here I've got this pivot point R2, and I've got this trend line lining up. That's confluence. Multiple things agree right about here. Not afterwards, not before, right about here. I will not be surprised if those two things intersect bullish. Now, again, the markets are going to do what the markets are going to do. But I won't be surprised if it comes up here and tags that long. And there we go, maybe. So another thing we want to do is we want to watch the tug of war. Now you can watch the actual tug of war. Of course, we can always go down. All right, new home sales coming in here also. I missed it. Let's see what it said. New home sales actual .62, forecast .69. So that is a miss. Previous .74. So that is a double miss for the market. So you can definitely look for, let's see if that, obviously the markets didn't have a panic over it or anything like that. But so we can go down to the 1 minute and just see. Watch what happens here. This is one of the advantages of trading view over Tradovate. The drawings stay accurate for the most part. Thinkorswim is good with drawings. TradingView, good with drawings. I suspect TrendSpider is. Tradovate is fine with horizontal lines, but if you draw a diagonal line on one time frame, like the 5-minute, and then you go to the 1-minute or the 15-minute, those lines are always in the wrong place. That's just a quirk with Tradovate. You just need to be aware of it. All right, hitting this fair value gap. I want you to understand that in this broadening formation, this is all chop. This is all chop right now. Here we are with our midline. And I'm going to change our midline to a different color or a different design. Yeah. Let's go with this. There we go. That is a derived line. See, we did stop dead smack on it right there. Now we're continuing. What do we see going south? VWAP 61.50, 2.25. But again, remember the idea with this linear regression. Now the chart's getting messy, I'll grant you. Let's take a look down here at RSI. The average is rolling down. We did come from a 30-ish back to the middle. We're rolling down. We're just scalping in between. That's all the markets are doing today. Remember, there's no money showing over here on the right. So these are all scalps at the moment. If you don't like scalping, there are just some days where you sit on your hands. Do not feel that if you're a longer term trader that you absolutely have to take a trade every day. There are some days that you just are going to say, well, but I showed up. I sat in my chair. I changed clothes. I shaved. I blah, 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 blah. I combed my hair. Whatever. I don't care. A smart trader knows that there are days that when you do not trade because you know that the odds of you losing with your strategy are that you're going to lose. Why would you take a losing bet? Now, I know it's frustrating the days that we come to the chair and we say, we're ready to trade. We're eager here. We've had our vitamins this morning and everything else. We're ready to rock. But if the charts don't give you a good setup, there is no trade. And you have to accept that. Just like a salesman goes into his job or her job. I don't want to be, whatever. But a salesperson goes into their job does not mean that just because they went to their job, they're going to make a sale that day. But they still show up. Because if they're not there, the answer is there's no sale for sure. They may get the sale of the century, or they may get nothing all day. They don't know. The difference being is the salesperson has to wait for someone to walk in the door or to call them, or they have to get on the phone and try and drum up business or whatever. But you are both the salesperson. You're kind of the salesperson and the market is the customer. And you just have to wait to see, does the customer show up? And if there's no customer, there's no sale. And a good, a bad salesperson when they try to pressure. And what happens to bad, when a salesperson comes in and they start to pressure them? What happens to that same sales? They lose that customer and that salesman's gone. 6 months from now, that salesman's gone. Well, if you try to do that with your charts, you're gone because you're going to start losing money. So be a good salesman or saleswoman. Whatever. Understand, same concept. Looky here. What do we got? A high, a lower high, a low, a higher low. What does that tell us? Springs winding up, compression. We're getting ready for a break here. We are compressing. Now, do we know where it's going to go? No, we don't. I'll draw it in. Like I say, charts are getting messy now. Let's go with that. All right, I know the charts are getting a little messy, but what do we see? All right, we have this broadening formation line here, trend line. That's a target. This is representing our compression. This, from here to here, is a box, isn't it? Because we've got a high that took out other highs. We've got a low that took out other lows. We've got a move back inside. Do you understand that I don't care what your trading strategy is, but when you're trying to pick a trading strategy, the question is, what do you see? Now, this is too busy. This is way too busy. It's hard to see it, so you got to kind of keep it in mind. So I'm going to, because I know that broadening formation is there, I got to clear some of this mess off the chart. So the strategy that I'm using, what are we seeing here? Linear regression is really flat. So we're ping-ponging. Red, red, maybe green. Okay, so we kind of went to green or whatever. So we're ping-ponging. So if you're trading linear regression line, which is kind of like Bollinger Band trading, then we know that we're ping-ponging right at the moment. All right, let me ask you guys, is this helping you at all? Do I see some trades in here? I see a trade setup, but I don't know which direction it's going to go yet. Yeah, I see a trade setup here. Let's move this over to the 15. Let's tighten this up. See, we went down here. We trended up. We pulled back into this fair value gap. We went long from it. We took out liquidity up here for whatever. Now we're back inside. There's no trade here yet, unless you're a scalper. So we just got to wait. Man, I've covered so many different things here today. I hope you guys are getting something out of this. Then again, you may be saying, I want a trade. You're supposed to call out a trade for me. And as I just said, there's no trade. Not for me. If you want to take a trade, that's your business. Take a trade. I'm not going to, if you've got a strategy that works, take it. If it works, it works. It doesn't, it doesn't. All right, give me some feedback here. How we doing? Is this helpful to anybody? Are you frustrated that I'm not trading? Or what? What are you guys seeing, thinking? I know I'm different from Kevin.
You're doing great, Marziti.
Well, thank you. Appreciate that. So let's see. All right, now what do we see here? We cleared that out, that fair value gap. So here was your classic ICT also. Here's another angle. Here's a low. Here, well, actually, this is a compound. A high, a low, came back in, rolled down, but then you also had a low, a high, you came back into the fair value gap, went up. So by the way, if anybody wants me to upload this recording, I hit the wrong stupid button this morning on the OBS, and I'm locally recording. I don't mind uploading it. It's fine. So if anybody wants this stream uploaded, do let me know, and I can send it up to my channel and post the link. That's perfectly fine. My fault for not starting the stream up correctly. Or the YouTube, I should say. I know I've done a lot of ranting and raving today, but I'm really trying to stress to you folks that there are times that unless you have a strategy for this, there's no trade. All right, there is a break south of that. Let's put that line back in. Wait, come here. There you are. This to this. All right. Now, what can we say here? We're back to VWAP. We're on the 1 minute chart. If this breaks, then you could look at a short here. But very commonly, what you'll see with VWAP is a break and then a retest and then a rollover. So you kind of have to be very cautious on your stops here because it's very plausible that it could break, retest either VWAP or this trend line and then roll over. Doesn't necessarily mean it will, might. It also matters what happens right here. What's right here? What's right here? Liquidity. Stops. People's stops. The people that went long right here. Remember too, it doesn't have to break through it. It can come right to the tick. It can stop one tick shy of it. Now this makes a good target south, but this break of this trend line is not really confirmed until we close and continue below this liquidity line. So sometimes you just got to take the trade. You know, you got to remember too that if you're playing for this here as a confirmation of the break of the trend line, your stops are further back because your stop is back here at the trend line. So you got to ask yourself, do you want more risk on the stop for greater confirmation? Okay, see, there we go. We're marching it down. Something just came in. What was that? Trump on Iran conflict. I dealt with both. Blah, 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 blah. Okay. Here we go. Let's see if I can. No, I'm not going to do that. Get rid of that. Let's just. Okay. There we are. And we're at liquidity. Right now, we've hit that same those same lower lows. We're taught traditionally it has to break them. Not necessarily. People could over here move their stops up. But they did. As we can see right here, it did take it out. It's also hit a fair value gap. Now we're in that broadening formation line down here. If you're watching your time and sales, they probably lit up like a Christmas tree. Now, what do we expect here? We expect a bounce, a rejection to go back north. So you say, well, okay, well, if I go long here, what can I, where should my stop go? I don't have a place. You've got yesterday's or prior day's volume node. You can really be tight and put it at this low that just happened. Where do I expect this? I need to zoom back in just a little bit. Okay, I forgot why this line is here. Oh yeah, that was that short-term trend. See what I mean about your charts getting messy? This here, this yellow line here, the dotted one, is the midpoint of the broadening formation. So if we are going back north, that's where we're headed, very possibly, although in the way is VWAP. If we are going to go south, we're going to that prior day VPOC. Why that prior day VPOC? Because a day or two ago, it was the price that everybody loved. So why not go for that? So we're expecting a reaction right here at this broadening formation line. It also happens to be a fair value gap. I think it's going to go north, back up to VWAP at least. Could be wrong. Doesn't matter what I think. Markets work independently. But what do we have here? We have confluence. We actually have three things. We got a fair value gap, a trend line, and a deviation line. That's a third deviation where markets typically, that's 99% trades happen in that line. So see, we got three different things aligning with that. That is confluence, multiple things agreeing. Now, how does it play out? Well, it could be short term, it could be long term. We don't know necessarily. We see that they're pushing north. There they go, going for VWAP. And there's a fair value gap right above it. And there's the white linear regression line above that, which is the absolute midpoint of the last 60 candles. So that'll be the last hour. We're on the 1 minute chart. So that would be 9:17 pre-market to 10:17 now Eastern time. So we got multiple targets. There's target 1. Actually, here's target 2 coming up maybe. Then we've got this trend line, which also aligns with our midpoint of our broadening formation. All right, there's linear regression. Missed it by a tick, but that's okay. All right, so it has moved halfway back of the linear regression cycle. Now, if it rolls back down, if it hits this line, considering it just now hit it, I expect it to break and come down here to 61.47-ish. Notice also, here's a high, here's a low. It moved into a fair value gap, small fair value gap here. There's also about halfway, there's your ICT trade. But ICT does not necessarily say that it's going to break and continue. It just says expect a rollover. It doesn't necessarily tell us how much. So the question is, what do you see? What have I talked about? I've talked about box trading, linear regression trading, broadening formation, and Jeremy's fans ideas. We've talked about volume nodes. We've talked about targets, liquidity grabs, fair value gaps, trend lines, VWAP. A little bit more coverage about VWAP. What is VWAP? VWAP is called volume weighted average price. The idea is to take the number of contracts sold at the average price or whatever. It's a moving average. It's a moving average in a way, but the main thing to understand about VWAP is it's in the same place on all time frames. It's in the same place on all time frames. My standard deviations, moving averages, things like that, well, they all depend on what time frame they're on because they count back so many candles. VWAP is anchored to market open 6 p.m. Eastern time. So because of that, it doesn't matter what time frame, whether you're on the 1 minute candle, the 5 minute, 15, 30, doesn't matter. VWAP is going to be in the exact same place. And as a result, it is the staple of targets. It is the ultimate intra-market target for many people. And you can actually, there's trading strategies based on VWAP, just like because you can also set up VWAP so that it has standard deviation bands around it. Just like I'm using linear regression with standard deviations, you can do VWAP with standard deviation bands around it. And that's a trading strategy for people. That's fine, whatever. But it's definitely something that I watch. Like I say, I've known people that trade based on VWAP. Now, it is not a to the tick kind of target. Here you can notice as it came down, it blasted through VWAP a little bit here, made this trend line, bam, went black, bam, all the way back through it here. Notice the VWAP line is here. Price went way down there, came back up, and so on. The point is, it makes for a great target. Now, why do I keep talking about targets? It's because everybody's got a different strategy. You've got to have your own strategy. You've got to have your own strategy. So I can't tell you where to get in. I'm trying to talk about a lot of different strategies here. You'll get supply and demand from Kevin every day. So I'm not covering supply and demand. But I can't tell you where to get in necessarily because it depends on what your strategy is. I am calling out some things as I see it. All right, so, but I can tell you about targets because that's kind of generic, universal kind of stuff that applies to most all strategies what are valid targets? Now, if you all, anytime that anybody's got a question about a strategy, you're more than welcome to ask any of the moderators. Of course, you're welcome to hit me up in DM or DMing is always a little bit better because I don't always see my name flagged in the chat. But you're more than welcome to do that. You can always talk to Signet. Of course, Signet is great about strategies. Kevin specializes in supply and demand, but I'll be glad to help you with your strategy or Signet, kind of thing there. If you've got a strategy that we don't normally do, be glad to talk to you about it. If you really want to talk about Ichimoku, oh God, I don't know that I'll get much into that one, but anyway. If you have ever seen Ichimoku, you'll understand. If you haven't, add it to your chart one day and you really got to learn to master that one. All right, what do we see here? We went at this time back here where we were kind of horizontal trading. We hit red. Ping pong, back here, remember I was talking about ping ponging? Ping pong, ping pong. We finally broke. We came to a target, the broadening formation line, the megaphone. Back to VWAP. Now what are we doing? Well, some people call it, it's not quite barcoding, but we're ping ponging. What does this tell us? We don't know. All right, if you're trading oil futures, 5-minute heads up till that report comes. Oil futures, let's see. Oil report in 5 mins. So if you're trading oil, get out. Start looking for a way to lock it up and get out. It may do nothing, but I've seen some oil reports just go crazy. And with all this Middle East business right now, who knows? We are ping-ponging here on the ES. We have a little bit of a high. We have a little bit of a low. We kind of have a small box, but understand there's no money in this box. It's from this high at 53 to this low. Yeah, it's breaking out. 53 to 4. Okay, so it's a 5-point box. A 50% move's only, if you could call it exactly, 50% move's only 2.5 points. There's no money here. Unless you're scalping, you want those 2 points, then fine. You may be a 2-point scalper, and that's fine. Where do we come back to? Where are we headed back to? Well, red. to red. There you go. Now, this is where I would consider going short, actually. Why? Well, we're bearish. Well, we're starting to turn neutral, but we're bearish, and we've hit the opposite side, one deviation. Now, this is still an area of interest to me that it could still go long here. My target, though, would be red in the bearish direction. So we're bearish. So I'm looking for the trade here for two reasons. One, because this is a great entry point if we take this trade south. Because I've hit an outer band, hopefully. That's one. Two, this band, if it is bearish, keeps moving away from my entry, which means that by the time I finally hit it, I'm making more money as I follow it down. Now this, all right, what we've got right there, spinning top. Let's zoom in on that. When you have this rally base drop, your first target is the close of is the low of this body right here, which also happens to be where the standard deviation is. We've got to go back through, or linear regression rather. When you see these kind of loops, you're looking for a 180. Now, it doesn't always happen, of course. We're digging into this fair value gap, which may mean we dig and then we turn around and go north again. But ideally, I'm looking somewhere down here near the bottom for that to happen. Let's watch and see. So understand there's two stories going on here. One, there's that fair value gap, but two, there it is, bam. Just like we talked about, that rollover to take that out. Now, your next target, right here, liquidity. Then the broadening formation and this fair value gap. If it continues south. So hopefully you're out of that trade by now, or at least have moved your stops up. Again, we talked about red to red. We're still in a bearish. I shouldn't say hopefully you're out of that trade, but your stops should be to break even, maybe a little bit of profit. Maybe your stops would be right about here. VWAP is not a good place to put a stop, because we see how it can chop all over VWAP. So it's not a good place to put a stop. But you should be, ideally, we should be targeting red down here. Let's see what happens. Now, the thing about this, of course, is red is walking away from you, which is wonderful if you're short here, because that means if you do hit red, you're going to be making more and more money because your target is walking away from you. Let's see what that news was. Crude oils. Let's take a look at that. Where are you, crude? Crude Cushing. Oh, here it is. Minus 5.8 million barrels. Expected minus 1 million barrels. But that's an improvement over, I guess that's an improvement. I don't really know much about crude. This is a Signet question about is this a good report or not. What is Signet posting in here? Window dressing. Over in the Discord, selling under. Geez, that's a lot to digest. I'll come back to that later. Where are we here? Let's go back to our trade. All right, you may have been stopped out here with this wick. And that's fine. You would have caught some profit. But that is one of the trades here from a band regression. You called it to the mean, the average. So we would have gone from red to the linear regression. Ideally, I'd like to see it still go to red. Actually, if your stop was still back here, a point or two back there, you still may be in this trade. We'll just have to wait and see what it does. But notice here, let's just pull this in a little bit so our volume profile updates. Let's go with, there we are. We're at 930 down here. So since the market opened, our volume profile is right here. Remember, as I said earlier, this is an area. So it can chop a little above, a little below, and everybody's still happy. But if this thing breaks north, well, then here's your next volume intraday volume node. Yeah. If you're unless you rushed your stop up, you would have taken some profit. But again, like I said, there's no money in this trade, really. If you'd gotten in, let's say from here, you'd gotten in at 54.25 to 53.5. So that'd have been, $37 a contract? Okay. If you'd have followed it down to here, though, if you'd gotten in here and you'd taken profit down here, what do we say, 54.25 to 51. So maybe as much as 3 points there. Again, it's a scalper's day right now. Now, let's say you're looking on the longer time frame. Bring this over, move this out of the way. What do you see? Well, a halfback. Here's a low. Here's a high. And right in here in the middle is a halfback on the 15-minute chart. All right. Saw context. All right, what am I seeing here? Low, a high, a move back to the middle. I'm seeing a box. Draw it out with this. Here to there, right? There's your box. Because we had a significant low, took out a bunch of lows. We had a significant high, took out a bunch of highs. We came back to the middle. This represents consolidation. And while it does look like it's trending up, notice we've got a low and a lower low, and then we've got this channel. This is bearish. So what we can expect here is maybe a breakup into here, maybe this midpoint line, or no, whatever that line is. I forgot. See, that's what I'm saying. Your charts can get too messy. But I wouldn't be surprised to see we'll come up here and then roll over. But this is a bearish channel, or bearish, what is this? It's not a flag. Whatever. Never mind. Whatever. Anyway, because the trend coming into this is bearish, This is a pullback. And now, this is a pullback, and then we expect a rollover to occur. It's also an ICT. If you look at this high, well, this low, if we get back up into here, we're looking on a higher time frame. It may make more sense on a higher time frame. Let's do it this way. Here is your low. Here's your high. Now this is actually bullish, excuse me. On the higher time frame, on the 15, this is, if you're an ICT trader, this is bullish. On the lower, it's bearish. You say, well, which one is the right one to trade? Well, it depends on what time frame you want to trade on. Because on the shorter time frame, the 1 minute, we're bearish. The ICT setup is bullish, but it's also a 15-minute. So it's a 15-time magnification consolidation of the chart. So if you're trading the 15, you would have gone long down here, and your stop would be down here, and you'd be moving long because it was low, it was high, moved back into the fair value gap, and now we're looking for it to go high. Understand that ICT does not mean that it's going to go up here. It just means that it's going to make a bullish move out of it. So maybe to this trend line, maybe to this broadening formation line. But it has started to make its move, and it may go, there's nothing more that it says. On the shorter term, look here. There, linear regression, very important level. If you're trading linear regression, if we go south, there's red. Remember when I talked about going short back here? See that your profit target is moving away from you, which is wonderful. Okay, there we go. Watch the tug of war in this candle. Because we've come to linear regression. Now watch this candle. What are they doing there? They're trying to go one way or the other. There's some pushback here. They want to go north. And there's people also trying to go south. So just watch the candle. Now bear in mind, there's a tiny little liquidity pocket right under this candle right here where that wick is. There's some liquidity because these people went long. There's probably, more here. How can we say there's probably more here? Because of this magnitude of this candle as a whole. But there we go. All right. So we got a pretty big candle here. So here is liquidity here. But also realize we're in a chop right here too. So until this thing runs, we're still in a chop. We're still inside the box. If you were looking at the box setup, we had this high and this, wherever I marked it, low. I guess down here. So again, what's your strategy? All right, well, okay, there we go. All right, so if you took some profits down there, hopefully you did. All right, so now there we are, wicking outside of the box. We're coming back up to the volume profile line, the visible range volume, or no, excuse me, that's a prior day VPOC. Again, see how we revisit these things? And remember, they're areas, not to the tick. But yesterday or the day before, whenever, people really liked this price. So why wouldn't we like it still today if we're chopping? So there we are, coming right back to that price zone that people really liked. Okay. So what did we do? We went one deviation up, we hit the line, we've moved back into that deviation. Now, short term, okay, where we were calling for a bearish move, we still are in this bearish channel, because that bearish channel is, well, if I can get this to draw. Let me just kind of draw it in the middle. Come on, draw, you stupid thing. Draw. All right, there's that kind of bearish channel, a series of higher lows inside. I mean, so that's bullish in here, yeah. But against the bigger trend, it's bearish. So this is a pullback waiting for a rollover. So we just need an entry here. All right, we've hit this. We've hit this. Do I think we should go short here? You could. Your stop would be up here. You can go short, targeting, but notice that we're starting to curve here. So, and what are we doing here? We've got this little fair value gap here that we have stuck our toe into, because the fair value gap was here to here. We closed it. We may be going north now, but let's see. We did take liquidity outside of the box. Now, if we move about, a quarter of the way into the box, which puts us right about in here, then this was just simply a liquidity run, and we expand the box. And set the high of that box to that candle that stuck its toe out. This is what Signet calls a draw and raid. Okay, there we go. There we go. Bam. All right, now we've hit that middle point of the broadening formation. All right, now we're moving up to 2 deviations away. But since we are moving more towards a bullish on the linear regression, this is not a place necessarily to take a trade. Here's your liquidity right here. This candle. There's the first one. There's the second one. All right. If you wanted to take a short here, the thing you have to understand is you're shorting against the trend. So you would see this little pullback right here, the top of this. You'd have a rally, base, drop somewhere in here, but do not expect it necessarily to come all the way back down here, because you're trading against the trend. On the other hand, if this was still bullish and it pulled back to the 8, yeah, I would go long there. Okay, we're still. So if you had wanted to go short, you would have gone short when we took this out right here with your stop back here. However, very likely you're going to get stopped out. Definitely rocketing. Now, let's come down here and look at our RSI. And we're sitting in the high 60s. The theory of the RSI and the weakness, okay, 2 good candles, look for a half back right to this fair value gap. Very possible we're going to hit it. Remember, we got this trend line here. It was from way back I don't know, back here somewhere. So look for this pullback to the fair value gap. Let's see if that happens. Can go short here. Again, there's no money in these trades today. It's a good teaching day, but there's no money in these trades unless you're a 1-2 point scalper. So if you did go short the moment we took out this, or got up in that area, actually we went to the tick on it, then you'd have a rally. This is kind of a base. Our drop would actually start at the break of the low of this candle there. And one target would be the midpoint of these two candles because they were both market moving candles. Obviously you've got the low of this candle on a rally based drop. That would be a target which you would have hit, but a tiny, tiny little scalp. With this fair value gap, the midpoint of the broadening formation. Remember, we're still inside that broadening formation. We've got a prior day VPOC, and then we've got our box. Now, in terms of talking about our box, let's throw up just for a moment. Where did we go? We hit the 786 line. We went outside of the box, broke. So here's the close outside of the box. Here's the break of that close. Would have been 61.57-ish. However, see, the problem with this, though, is the 50% line was right there at 58. Now, again, no money in that trade. It did actually go to the 786. So, okay. Whoops. So, on a larger scale, that would have been a great trade. But on this here, where we're so tight on the points, again, there's just no money in this trade. So it's a good teaching day. All right. We had those two big candles, easily made a 50% rollover. Half back on that. Could have gone short when it got up here, which it did. So if you'd have gone short there, targeted the half back, you'd be out, which is also the red. Now, standard deviation trade. Let's take a look. We went almost to the third deviation. We're coming back. We've come back right here to the mean. We've also come back to the midpoint of the broadening formation. Prior day VPOC. Volume point of control. Again, you can see there's multiple magnets all over the place. That's the problem with a tight consolidation day, is all your targets are stacked one on top of the other. So you're like, well, which one? Well, which one? Well, we don't know because they're all stacked on each one on top of the other. Now, it does give more weight to these areas. We'd say we have confluence here because we had what? The midpoint of the broadening formation. We've got a VPOC, and we've got our box right back here. We also have got the linear regression right here. So putting all three of those together makes for a very large magnet, but we don't know necessarily, is it going to be here, is it going to be here, or is it going to be here? Now, ultimately, it did hit this, and then there we are back down to VWAP. Now, however, the other problem that we see with this linear regression, especially on the 1 minute, is we see this curving up and down like an ocean wave. Let's go to the 5 minute. All right, we were bullish, rolling over. We're neutral right now. So on the 5 minute, linear regression is neutral, but we saw on the 1 minute that it was starting to roll over a little bit bearish. again, on the 5 minute, we're looking at playing ping pong. And as you can, well, it didn't quite hit the 5. I mean, the 5. Didn't quite hit the red band up here. But it is hitting the red band down here. Kind of interesting. So if we're playing ping pong on the 5, you could say, well, I could go long here, expecting a ping pong back up here. But again, remember on the 1 minute we said it was bearish. I'm still sticking with the bearish narrative. I still think we got a overlapping. We got a fair 5 minute fair value gap. There it is, right there. Over here, we're around a lot of indicators inside of a box, and the box really is no good. It's played itself out. You could draw a new box from low to high, or from this high to this low. But again, we're not seeing these break out and continue patterns right now. We keep coming. This is not a great day for a box trade. And that's another thing you kind of need to understand. There are days when it's just not when certain strategies don't work, and that happens. So I'm going to take the box out. Like I say, I'm still kind of leaning bearish. We've got a high, lower lows. The 1 minute said it was bearish reversal channel, whatever. So I'm still waiting for that to play out. We're coming up on 11 o'clock where I'm going to start cutting this out. So 2 things here. Number 1, if you've got any more questions, please feel free to ask while we're in the voice or in the text. But the other thing, so yeah, feel free to ask any wrap-up questions, strategy questions, or anything like that. Where we can zero in. It's a slow enough day that we can zero in if you want to talk about some refinements to your particular strategy. And we can take some time doing that. That's fine. The other thing, I guess, we've done a lot of education today because there just weren't a lot of trades. I've called out some trades, but to be honest, they were scalps because there was just no range today. And like I said, just like the salesperson shows up to their job doesn't mean they make any sales. There's some days where you just don't get any sales as a salesperson. There's some days where it just doesn't work for your strategy, whatever that may be, and you just end up having no trades. Finally, like I said, since I set the stupid button up wrong and did a local record instead of a YouTube record, if you want today's session posted, let me know. I'll be glad to do that after the fact. Just send me a DM, not in the chat because I may not see it. Please send me a direct message, Marzidi, with your message about wanting the stream posted in the chat or whatever, and I'll be glad to do that. So, questions, talk, comments, anything like that? Okay. All right, folks, I'm going to wrap it up here. I hope you got some education out of this today. Very overwhelming, I know, I talked about 4 or 5 different trading strategies. And, I hope you got something out of it. And certainly if you ever have any questions, you're more than welcome to DM me. And we can do that. And we can always work it in. And also, too, although granted, if you're listening to this just passively and maybe you're at work or something like that and you want an evening stream to cover some stuff, let me know. We can always do an evening stream. I am one of the few moderators that is available at night to do an evening stream, and I don't mind doing those. So if you've got something you want to live stream at night and ask questions, let me know. I'm happy to do that for you as well. With that, this is Marzidi signing off. stay green, as Creedmoor would say. But my saying, of course, many of you know, is be good, or at least be good at it. We'll talk to you guys later. Bye-bye.